Well, good morning, everyone.
Good morning.
Is it morning? Yeah, it's 8. We're a little earlier than normal. And I think it's because I don't want to work real hard today. See that Wi-Fi there going on? I don't know why it's doing that. Because we are on, I don't know. I hope it's not messing things up because it's going to make me upset.
Hopefully we're not delayed and like kind of freezing and stuff.
Well, the black screen thing that happens. I don't know why. It could be just the, it says over here we're high, but it could be, there we go. We're back.
All right.
See that? We got an eye on you, but see that Wi-Fi there? Anyway, stop talking. We'll see what happens. I don't want to show a chart yet because it's fixing some stuff over here. Check it out.
Oh, okay.
Yeah. All right. So today is about what's going on in history regarding recessions, stuff like that, right? What does an economic downturn mean to the housing market and you, right? Because you're hearing a lot of people being told by their friends to not buy or stuff, right?
Yes. So almost on a daily basis, I'll talk to somebody and they'll be like, oh, how's real estate going? And, you always say it depends, it's good. Or you can say it's going great. It kind of depends on if you're a buyer or seller.
Right.
Obviously you never want to say it's not doing good because that's not the case, right? It just depends on who's on the winning side this time. Right. But
well, and also it depends on what's happening in general out there, what's going on. And right now we're, people are talking about a recession. We're going to be, recession's going to be starting soon. We're in a recession already.
Yeah. And like you've been saying for months, like you thought we were already in it.
Right. And the first quarter was down 1.5 or 6%. They think second quarter is going to be down the same. So we're there. Yeah. We're in a recession is 2 quarters of GDP, which is gross domestic product lower for that period of time. And that's kind of where we're at.
And I mean, we're seeing like 1.5%, stuff like that. It's not like some kind of crazy, way out there reduction in GDP, but so people think like, oh, okay, well, how long are we in this recession, right? So I'll let you answer that.
Well, okay, so if you look at the history, and I threw some little things here we can throw on screen, that way when they cut this up and put it all over, YouTube and everything, I am actually freezing, or we are freezing on Facebook, just so you know. Yeah. So what are you going to do? We'll see what happens. We'll redo this afterwards. Throughout history, recession period, interest rates go up, and at the beginning of the recession, but then to come out of it, they actually lower the interest rates to stimulate the economy. Kind of sounds pretty weird, right?
Yeah.
I kind of want to look back at each recession going all the way back to the early 80s. So what I did is I have a screen here that we're sharing, and let's get rid of this so you can see the whole thing. So if you look from 1980, so January to July, so that's a 6 month. That's kind of what I'm feeling we're going to be in, 6 to 8 months. We had mortgage rates at 16%, and they went down to 11.8%.
Yeah, that was quite an improvement. Huh?
Yeah, and then right after that, they had another recession, right, a little bit later. And that was for 1 year, 4 months. And that so rates went way back up, right? Because they had inflation and everything else. And so they had to and then they dropped to 13%, which was a bargain. And then in the 90s, from 90 to 91, the 80 to 81, it was kind of a savings and loan fiasco that had issues. And then in the early 90s, there was another kind of issue going on. I remember that I first got out of the Navy, and man, it was a horrible time if you wanted to be in real estate.
Yeah.
So that one lasted for 8 months. Early 2000s, you had again another 8-month period. It went from 7.4 to 6.8. Not a major difference, but the biggest one we ever were in was a Great Recession, which I think it was a depression. But that was had classified so many months of so many quarters of GDP being negative, and they don't want to say a depression because it just sounded so bad. Right?
Yeah. Well, yeah. And obviously I remember that because I was,
you just became an agent.
No, not quite then.
Well, no, you didn't. When did you get in the market?
Oh, I got my license in 2016.
Okay. So,
yeah.
All right. So, yeah. So this was I don't want to say a bad time, but those 2 years, that first 2 years of that recession was pretty ugly. Yeah. And the government tried everything to stimulate. They actually took FHA loans and allowed them to go up to like $699,000 to help people refinance and buy homes. And that really didn't help. That made it worse. And then, so we went all the way up to these huge numbers for FHA being able to help people buy homes. Mm-hmm. And then that went away after a period of time. And then everybody's like, I want a FHA loan. Well, I'm sorry, it's only available for $300. Yeah. And then we have the COVID-19 recession, which most people didn't realize we were in a recession at that time.
Mm-hmm.
And that was for 2 months. And we went from 3.8% to 2.8% interest rates.
Yeah, I was going to say, there's no option but to go into recession when you stop making stuff, right?
Well, when you're told to stay home for 60 days, there's not much you can do.
Yeah.
So these are the mortgage rates on recession. The reason I'm saying this is typically rates go up and then rates go back down. We have seen rates go up recently, right? And fast. I mean, the fastest I've ever seen them go up. Like, because I wasn't around during these period of times. Right. These huge numbers. But see, normally they only go up about 1.25. Yeah, usually a little over 1.5 to 1.75, a quarter or so, 3/8. So that and even here when the Great Recession, we were at 6%. So that's not a big difference in rates,
Yeah.
So what I'm saying is we're in the fives right now, conventional low fives, and then FHA, and this is just what they're saying out there. And we're in the the high fours for FHA. So if this is going to be the case, then as we come out of this soon. Because I said but basically I think we're going to be in this for another quarter or two, and then we're going to start coming out of it. So we're already in the 6 months of it, right? Shocking. We're like, wow, it's July, so we started in January, February, March, this first quarter. What's that? April, May, June, second quarter. Now we're in the third quarter. We'll see where that comes out. So we're pretty much on average, I would say 7 to 8 months. We should be coming out of this pretty soon. So what does that mean? I've been saying since, I don't know, a couple months, that by October, you're going to be wishing that you had bought your house.
Yeah.
Right.
Well, and people keep looking at these rates, right? And like you always say, they're historically low. What they're missing, and this is always kind of the picture I try to paint. It's like, okay, so if we would have tried to buy a house last summer,
a lot of people did try.
Right? And say you had 50 grand in your savings account. You're going to be writing an offer for 50 grand over what the house was going to appraise at. That way you could get the house, right? So right now, what we're seeing asking price offers. We're still in a seller's market. It's a little fairer right now. Interest rates, a little bit different than they were last year, but still really good. So let's just go ahead and write these offers, because what we're also seeing?
No.
What?
I don't know what we're seeing. I said, do you know what we're seeing? I said, no.
Oh, okay. What we're seeing is that sellers are kind of understanding. They're catching up with the market, right? And they're saying, okay, I understand I'm going to get an asking price offer, but I might need to give some credits at closing, right?
Right.
And so we're seeing that where 6 months ago it was some sellers were just hard nosed. They said, absolutely not. I want you to release all contingencies, go 50,000 over. They wanted you to give them everything they had for their house,
Right. And that's the difference. People are being nicer now.
Yeah.
They're working with you.
Oh, yeah.
And I'm hearing a lot of people go, okay, instead of getting the value down, take the money, take 20 grand as closing costs, take part of it to buy the rate down, the other part to get rid of your mortgage insurance. Yeah, those are great ideas. But, in about 2 months or 3 months, you might be refinancing in 6 months.
Yeah.
And so you just wasted 10 grand, right? Why don't you do the mortgage insurance, have it pay for all your closing costs, right?
Mm-hmm.
Keep the rate where it is. And then in, 6 months or after your first 6 payments, we can go ahead and refinance.
Yeah.
I'm sorry. Hey, everybody, I'm sorry about internet today. I'm having problems with Comcast.
Not surprising.
Calling them out. Because that Wi-Fi should not be on, and your computer, it's not on over there, right?
No. I was gonna say I've never seen that Wi-Fi. It just went away now.
Yeah, but it just keeps coming up like it's slow, and we're not even.
Gotcha.
I'm not even on it. The only other computer that could be on it is yours.
Gotcha.
And
yeah, it's showing network.
Yeah. So let's get back there.
Yeah. So always trying to instill confidence. Something we were talking about off camera was that
we were.
Yeah.
We talk off camera
all the time. Yeah.
Oh, okay.
Is that people really, they treat the housing market like the stock market, right? Like they see the slightest fluctuation, or they hear things are down, or GDP is not working right. It's going down 2 quarters in a row, and they freak out. And it's like, okay, if there was ever a more secure thing you could buy, it'd be the place where you actually live, the roof over your head, right? So
because they have to work with you if you buy with FHA. What I mean by that is, say that you lost your job in 6 months from now.
Mm-hmm.
They would, under FHA guidelines, they have to work with you for up to 12 months.
Yeah.
That means that you can miss 12 months of payments. They put that into another loan attached to your current loan as a FHA loan, and it's called a partial. I'll get the words out. Not repayment. Basically, it's a off of your mortgage insurance, right? So basically, they'll do they have to work with you under FHA guidelines. Same with VA.
Yeah.
Conventional does not. So what I'm getting at is, your landlord doesn't.
No. They're
going to kick you out if you don't make your payments.
Yeah.
When you own your home, they're going to do everything in their power to help you, especially under FHA guidelines.
Yeah. And anyone who's a renter right now that's thinking that like the COVID restrictions and the COVID eviction bans are still going and stuff like that. Nope. It's gone. So everybody that kind of hung out and didn't pay their rent for all of that time, they're already out on the streets with no one that's going to rent to them. So landlord, once you haven't paid by normally by like the 12th, that's when I used to serve notices. You're
a bad boy.
Yeah. You're going to be getting, 30-day notice to move. You're going to be getting eviction. So, but yeah, like you said, FHA has to work with you. So there's always uncertainty in the job market too, right? I mean, even
right.
when unemployment's low, people can still get laid off. Companies can still fold. So,
well, right now they need truckers. I'm just letting if you say you lose your job, go become a trucker. They need truckers so bad. They're paying so much extra money.
They're paying killer money.
And construction people, they need all over Texas. I mean, they need so many of these types of jobs that people don't want. They're doing, there's tons of industry. You might not be able to stay at home in the air conditioning. You might have to go outside, but you can get a great job. There's a ton of great jobs out there that's available. We have 11 million jobs out there available. So if you don't like your job, it's not letting you buy your house and you're worried about losing it, go get a different job.
Yeah. Always good advice, man. I know you've given that quite a few times.
Well, the reason I'm saying that is because there's a lot of people in my industry that are looking for jobs.
Yeah.
Yeah. I'm just because a company closed up yesterday. A big company closed up yesterday.
Kidding.
Yeah. Yeah,
Dang.
with that non-QM, which is the outside of conventional stuff, when you do bank statement loans, DSCR, which is the debt service, those alternative programs, those companies are hurting. Some of them are, and this one closed up. Dang. It was called Sprout Mortgage. I don't know if you ever heard of them. I
can't say I have.
Yeah, well, they've been around a long time.
Gotcha. Now I feel bad.
Yeah, well, that's our industry.
Yeah.
Yeah. The one thing you don't have certainty in our industry is a job.
Yeah. Yeah.
Because what happens is you do everything you can and you do real well. Let wife go back to work. I'll enjoy my 10K per month rent and rentals. There you go. I bought all cash. Good job, JT. And that's what it is how do you do passive income? And that's something you can do in real estate. And that's what you want to continue to do over time, not do all at one time.
Yeah.
So there you go. So
yeah, don't be afraid, folks. It's always a good time to buy, especially when you're talking about, the roof over your head.
That's right. All right. Anything else you want to add today?
No, just
and again, I apologize for the internet.
No. Yeah. Thank you for your time as always.
All right, no problem. And we will see. I'll be back here in the morning. Bobby will be back here next week on Tuesday.
Yeah.
All right. Everybody have a great weekend.
Awesome.
We don't talk to you. All right.